Yeah, I guess you can't really see me in this lighting. Hey everybody, it's Mike DeShazer here in Seoul, South Korea at Proof, and today we're going to talk about the Fisher Transform. One of the most important things to remember when trading is that money doesn't grow on trees. But with this Fisher Transform algo, I mean, it can get really close. But don't take that as trading advice, and don't don't be doesn't these trees no money don't grow. So I'm here inside my Avocado terminal, and let's take a look at two indicators that you're probably already familiar with, and I can explain how it's similar. So if we take a look here, I have the MACD indicator, and then I have the RSI. RSI is like an oscillator. It says, okay, it's underbought. Here, buy, and then okay, now sell here, and then right. So you have that kind of oscillation with the Fisher transform. At the same time, you have like one score and one signal, and you're looking for those crosses. That's kind of like how you read the Fisher transform and how it's kind of different. So now let's take a look at the math. Right. The Fisher transform is actually a pretty powerful algorithm that allows you to do some very interesting things, like predict price movements. Now again, disclaimer, not saying you should run a bot that just does this without thinking it through, but if you do, I'm going to explain it, and at the end of the video, we'll show you how to use the backtest inside of Avocado to see how good this bot would actually perform. So let's take a look. You got to get all of these numbers down in order to get your Fisher and your signal. So when you run the algorithm, basically you get a signal and a Fisher. The signal and the Fisher are two numbers that move like this almost together if you were to plot them, and occasionally they cross over. And we'll get into how that crossover produces sell and buy signals. It's really pretty cool. But the major number here is actually the Fisher. It's called the Fisher transform. But the Fisher would be nothing like the signal. Kind of like the fisherman would really be nothing without the fish in the sea. Bad joke. The hardest part about the Fisher is that you got to use previous values. So when you start from the first number or the first date or the first candlestick, it gets a little tricky. The numbers that you're relying on here is the median of, which is just the high plus the low divided by 2. But you're depending on this number, and then you're getting the minimum median in the last, whoa! Those numbers just popped up. You're basically taking the current candlestick that you're on and the period. So period 1, there are 2 periods. There's one that's an interval of 10, which is your sample size, and there's like more like a buffer size, right? So you're taking the first, which is usually 10, so this within that, and the median of the last 10. The same for the highest. You're taking the current one and getting the median of the last 10. So period 1 here means 10. Then you're going to go through previous values. So we're not going to try to make this too much of it into a math class, but the algorithms are out there, and we do have one on GitHub you can use. But this is kind of how Fisher works. It focuses on the medians and then the minimum medians within an array of the last few prices, and the max median within the array of the last few prices. So you'll notice here there's a lot of 0.5s and 2s, so we're halving things a lot, and we're doubling things a lot. Okay, and occasionally we're taking a quarter, and this is sometimes arbitrary, but this is essentially the Fisher computation, and these temps are just kind of staging for these variables. To go back to math class for a little bit, logarithms tell us for a number, so if you log a number, it tells you from a certain point how long the growth takes. And we use how long a growth takes when we're analyzing price movements, and that's what the Fisher transform is really all about. So we get a signal and we get a Fisher score. Now, when it comes to the Fisher score, we sell when the Fisher score is above the top guide. So when you have basically a Fisher score, let's say this is your Fisher movement, goes like this, and that's usually price is too high, price is too low, price is too high, and then you have another indicator that looks like this. And occasionally they cross over, but we'll talk about this. This is your signal, right? And then Yeah, and it goes like that. They kind of go in tandem. But when you have these crosses, when the signal is greater than the fissure, so boom here, and it's over your top guide. So you'll have guides like this. So you'll have a top guide, which is usually 0.5, and then you'll have a low guide, which is usually like -1. And so basically when you go above this guide and you have a cross, this is a sell, and when you're here, this is a buy. You look for things that go outside the bounds of your guides. Now, the other thing that's really important here, so some people think a really good sell signal and a good buy signal is based on taking your lowest buy fissure and your highest sell fissure. What this means is that every time you make a buy decision, you're saying, okay, this means buy. You set this number to the lowest buy, and if you get another buy signal and it's not lower than that one, then you don't buy. And same for sell, except higher than, right? So I've been running these quite a bit, and I can say that I prefer not to use this optional bit here, but some people have said they do. Maybe in cryptocurrency markets, it's a bit different. So that's essentially what you're looking for, going outside of your bounds and having a crossover between your signal and your fissure. Now, let's take a look at the backtest and how this whole thing actually performs in cryptocurrency markets. So crypto markets have not been very friendly lately. As you can see, it's just been a decline, just horrible decline. I'm looking at Bitcoin chart. Let's run our command. So I'm going to type in fissure, and in my autocomplete I see the fissure transform backtest. So we're looking here at Bitcoin, and it works best on the 1 minute chart. So let's see how it does, and does quite well. Buys, let's see, doesn't buy here, sell signals, buys here, sells up here, buys here, sells up here. Let's take a look at a random cryptocurrency. Let's go for EOS, and same 1 minute. Let's run the fissure transform and get a slight return. This is a really down market, and that's the thing. All it's been just pretty bad, but to get a slight return on that is actually pretty good, and even be steady when everything is just going way down. So one of the really cool parts about Avocado is that we have our analysis, which is a 12-hour report that pretty much gives you the reason for a lot of the downtrend. So this is all red, so this means that there were negative. This is pretty much the news for a particular cryptocurrency, and here you can kind of get that breakdown, and as well as what's been happening on GitHubs of popular tokens, as well as sentiment from whale groups and other discussion forums that our analysts basically give an update saying what people are saying. And so here, people are saying there's a bullish flag in the United States, Germany, and then you can also see kind of a summary of what's happening in like Japan, China, and you can even see the crypto arbitrage. So that's one of the cool things, like when bad markets like this are happening, and you can also kind of go in and look at the different dates. So I can look at yesterday's report, the 9 a.m. and the 9 p.m. report. So that's pretty cool. And a nice little fun feature for figuring out what's going on with this stuff. I hope this video was useful for you, and if you're interested in getting access to Avocado, you can go to avocado.proofsuite.com. We have early alpha signups for the retail side of Avocado, which features most of what I just showed. May the avocados be with you. I think may the proof be with you sounds much better. So let's stick with that. May the proof be with you.